Let's start with the largest of those private healthcare groups, Mediclinic, International Private Healthcare Group. Founded in 1983, probably somewhere in the Cape, began agglomerating these privately owned hospitals. The Mediclinic group of hospitals, very well known in this country, but also bought a business in recent years called Herzlanden in Switzerland, and then most recently in the United Arab Emirates. The group has mushroomed to a market cap of 62 billion rand. Can you believe it? Price to earnings ratio looks quite high at 26. Dividend yield of 1%. I'm going to ask our production team to bring the chart up on the wall. There we go. So look at that, Rob. I mean, it really does very well in recent periods. What do you ascribe most of that movement to?
Well, I think really good growth out of the Middle East. Switzerland has got very high margins as well. And then on the local front, it's very defensive business locally as well. They're not the biggest private healthcare in South Africa, but
second to Netcare, perhaps.
Second to Netcare. Yeah. And they've got specialized operations, and their surgeries are quite specialized. So they've got very good margin in that specialized surgery side of the business. Got income coming from a good rand hedge and a good specialized surgery as well.
Yes, so just to unpack that model, so you're saying you've got a place like the Sandton Mediclinic here in Sandton in Johannesburg, and that's got associated medical facilities, specialists around, people come in and do their operative work there. Obviously, when people end up in accidents and that kind of thing, there's a whole sequence of affairs that happen there. It's high margin. A lot of the people in this country are covered by medical aid, so obviously they are in a position to afford these kinds of bills. And, you know, as people get richer and richer, this is a growth industry.
Yes, it is. The population as well, you know, we've got increase of disease, we've got an aging population, especially on the wealthy side of the spectrum. So, you know, it's a market that's always there. And it always needs growth, and the margins are high.
Yep.
And on the higher LSMs, they're all covered by medical aid. So generally, they're getting paid quite quickly as well. So there's not a lag on when they get paid.
Too. Let's talk about the United Arab Emirates, which is where they've got this business. I mean, that's where the Proteas are busy playing cricket at the moment. If you look around the stands there, I mean, that is a population made up either of very rich citizens or expats, both of whom, you know, are probably loaded and have all the necessary medical care. And so again, that's a kind of a sort of discretionary medical business where they're probably doing a lot of joint replacements, a lot of cosmetic surgery, all that kind of thing too.
Yes, they do. And the thing is, there's not enough beds actually in that area. So the growth, they put in a new wing onto the city hospital in Dubai. Okay. There's going to be a new wing there, so there's growth. And also they're stepping, at the moment they're really in Dubai, but they're moving into Abu Dhabi as well. Okay. So Abu Dhabi is going to be a whole new market for them.
I think that's where the Proteas actually are, right?
Yeah, but still in the Arab Emirates. So they're moving from different cities within that Arab Emirates. So still got a growth potential, and as I say, there's a limitation of hospital beds in that area.
Let's talk about the kicker that this thing got though with the Remgro inspired refinancing. So they buy Herzlanden, right, and they get a lot of non-recourse debt in Europe. And then things look a little bit iffy, but somewhere in the course of this period, they decide, yes, we're going to refinance that. Remgro comes to the party, underwrites it, takes their stake up to about 44%. They're now at a much better position. The balance sheet looks a lot better, and they get the timing quite right. You know, I think it was like at 875 rand to the dollar. So this surge, in part, has to do with the fact that people were a bit worried before about all the debt. But now, you know, Remgro have sort of taken care of that. It made the results look a little bit sloppy. But overall, the whole thing now looks like it's primed to grow. No stress issues at that level.
Yeah, it's defensive. And before, you see, just before 2013, as when Remgro came in, it was like late 2012, and had this very big debt that they had to restructure. And from there, you see that the markets come back into play. The only negative maybe is that the free float on Medicare is only about 50% now, because Remgro holds so much.
Yes.
So, you know, when a big buyer comes in, big sellers,
I think they own 44%, and then the PIC owns like 50 or something. Not 50, another 10, so that takes you to 50.
Yeah, so the free float's a bit small, so when there's big transactions going through, it can be a little bit choppy on the share price.
Management, I mean, we know the Remgro guys are all over this, so on the board, Jannie Durant, the usual suspects. I think the CEO here is Dani Greiling. I hope I've got the right Afrikaans name. And he's new to the job, but he was probably there for 27 years before he became the CEO or something. No issues there?
No, I think they run very well. Their purchase in Switzerland was good. Abu Dhabi's been, Arab Emirates has been a good purchase. So good management and overseen by Remgro.
Okay, so we own this one in the Hot Stocks portfolio already. We bought them here at like 75 rands, all-time high. We've had them for a kind of, I don't know, 3 or 4 weeks. They're still at the same level. No reason to be booting them out. It's an emerging market stock. It's big. The market likes it. The institutions like it. You're happy to call it hot? We carry on holding this one?
I'd still call it hot. It's not my best pick out of all of them, but I'll still call it hot.